I'm gonna make another quick update on Bitcoin because I wasn't too happy with the last video, but what I've done basically is I've just cleaned up the charts a little bit, made it a little bit cleaner, specifically using a different data feed for one style of my trading for a more intraday, intra-week basis, and then made the Bitfinex chart to be the overall macro picture for like investments, if you will. So weekly, we've got number one, we've got support at 20K. That's open structure. That's my downside target. It has been for a long time. We've got critical levels of support here. 1, 2, 3 rejections. You got body closures 31.8, call it 32, but 30K psychological level, right? So obviously I am still expecting price to at some point liquidate this low before coming back up, testing the structure, and then maybe even getting that right shoulder. So I am actually favoring the 30K to 55K rally at some point this year. But just keeping it very simple, we're in no man's land at the moment. Yes, we've got a couple wick rejections, but nothing too substantial. So we're free for all. Don't try to catch that. It's catching a falling knife. Daily, we've got the trend line really clean, running down like so. And as you can see, we've obviously got our lower high, lower low, and we're looking for a lower high here. So we've got a few different areas to look at. We've got firstly the weekly retest. So we may come up, test this weekly, and then fall down, which is actually, to be honest, ideal. Option number 2 is we test the bodies of this daily structure. We catch people out early from liquidity on the trend line, liquidity on this weekly level, and then we get short from here. Okay? So that's short number 2. Option number 3 is that we stall here, we stall at price here, and we come down testing within the range before making a true lower high, like so. And that's kind of the approach that I'm playing right now, is getting this quick short, intra-week short on the small time frames before price coming back up. And what that'll look like on the 4-hour is if we jump down here, what we've got is the high of last week here. We've got another high that came out to test it. Then we came up yesterday and we liquidated these highs. Okay, and that's why I'm anticipating the short, because now we're trading back below. We're stuck below, and until we get pushes back up, I'm kind of bearish. And the reason I say this is because if we just plot 0.1, 0.2, we're stuck in this range, okay? The reason I think that we're going to come down and test the bottom, the lows here, before going up to that first initial weekly level there, that one, here, before we test that, because we've now taken out the highs of this range, we've come out, I believe we're going to now come down, test the bottom of this range here, before rising back up, okay? Because we got stops here, and we got stops there, so we've already got confluence for further downside. And we've also got this ascending trend line that may act as a little bit of a support here. But that's okay. So 39,000 psychological level. We've got inflection point at 37. And then we've got my downside target at 35,500, because it will inevitably liquidate these lows at some point. So for me, 39,000 to 35,500 is that quick short-term move before potentially price reverses back up and forms a larger substructure higher low. So it would look like potentially something like that, right? It would just be the low, high, higher low, higher high, all within this larger range there. Or within that larger range. So if then we jump down to the lower time frames, I'll quickly mark this up because I'll show you what I'm in. So we had the 4-hour here. Okay. We have that inflection point down here. We have 15-minute London high. We have bearish engulfing, stops above the highs, 45 pips, something like that. Maybe it was a 46, 47, I'm not too sure. But then we've got first target here, which is London. London highs. Okay. Boom. 4-1 to the first target. Under here, this area here, it's all empty space. It's all empty space. So that's good confluence for me to get short. Now, what we know is that this is kind of the level that's holding price up. We'll mark to the whips and fake false breakout. We can see also that we've got trend line. So initially I had it like this. We broke, came up, retested once, retested twice, and now just pushing away. We can adjust that. We've come out, broken, retested, but then we've also now got this, broken, retested. So we are actually looking quite decent. I think it might be the 30-minute that it's still open. There. Tiny retest. We may actually just come back up once more, retest this trend line, and then roll over from there. We can also bring it up. We've got one retest there. What we may do is we've got a little bit of a head and shoulders going on here too. So we've got our price came up, left shoulder, head, and now we've not really tested this right shoulder over here. So we can align the trend line. I think that's exactly how I had it. So we may come up, make one more support down here, come all the way back up, stop out the right shoulder, and people that have moved to break even too soon, and then start that rollover down into the lows. So my stops are nice and protected, and we've got this confluence. So I do expect price to come back up, hit the break even, which would be fine, before rolling over. So I don't want to move to break even too quickly, just because if we look at it from a larger picture, we've got my downside target on the 4-hour at the bottom of this range down here. So it's a 7-1. I don't really want to choke it for the sake of missing out on this move, because I do expect price to come down here at some point. And that's really it. And that's really it. That's my thought process and what I'm looking at. So I'm happy I've done this update, because even though my ideas are the same as it was yesterday, I just didn't like the way that it was articulated and portrayed. So, as always, we'll continue to track as time goes on.